The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
The Santa Claus rally finally shows up, but on the back of a major geopolitical shock. Live from Studio 2 here at Bloomberg headquarters in New York. Happy New Year. I'm Romaine Bostic.
And I'm Katie Greifeld. We're kicking off to the closing bell here in the U.S. And there's a lot of green on the screen despite all of that geopolitical turmoil that we're sifting through right now. The S&P 500 higher by about 0.6%. More so if you take a look at the NASDAQ 100 higher by 0.7%. I wanted to highlight the Dow Jones. I'll never do this again, but it's at a record right now, higher by 1.4%. A lot of that comes back to Chevron, and that brings me to what we're seeing in crude oil right now. We had the ouster of Nicolas Maduro over the weekend. You can see crude prices actually rising right now, Romaine, higher by about 1.7%.
Yeah, interesting too with the moves today. Today is the final day of that so-called Santa Claus rally, an annual pattern first recorded back in 1972 that shows U.S. stocks typically rally the last 5 trading days of the year through the first 2 days of the new year. Before today, though, we were down 0.75% over 6 sessions, but today, that unusual catalyst of Venezuela pushing the S&P into the green for the 7-day stretch, though we should point out it's a gain that's likely to be the smallest since a 0.1% rise back in 1996. While tech stocks like Amazon and Meta are contributing to the moves higher, the more notable gainers are oil stocks like Chevron and Valero, defense stocks like Lockheed and L3, mining companies like Newmont and Freeport, each potentially benefiting from the U.S. asserting control over Venezuela's commodities infrastructure. And that is our top story of the day. The political and economic shockwaves from the U.S. military seizure of Venezuelan President Nicolas Maduro, who just 3 hours ago appeared before a federal judge in New York City, pleading not guilty to charges of narco-terrorism. Bloomberg correspondent Myles Miller is outside the courthouse in Lower Manhattan right now. Myles, an extraordinary day, quite frankly, an extraordinary 3 days that we've seen here in New York City.
Yeah, Romaine, that's right. Nicolas Maduro pleaded not guilty in federal court in Lower Manhattan today to charges that could keep him behind bars truly for the rest of his life. When he walked into the courtroom, he wished everyone a happy new year, but at one point someone in the gallery screamed at him and he had a loud outburst saying he was kidnapped. He and his wife, of course, sat with headphones for translation as Judge Alvin Hallerstein listened to and laid out the charges against him. Now, he was asked if he would enter a plea, and he did enter a plea of not guilty, saying through the interpreter, "I am innocent, I'm not guilty, I'm a decent man, and I am president of my country." There are 4 counts against him, which include narco-terrorism, conspiracy, cocaine importation conspiracy, and weapons charges. His wife faces 3 of those counts, and if convicted, he is looking at life in prison. Now, prosecutors say Maduro turned Venezuela into a cocaine highway starting in 2000, moving loads of cocaine under protection of Venezuelan law enforcement. He became foreign minister in 2026 and started selling diplomatic passports, according to prosecutors, to those drug traffickers. Now, we know that they've traced drug money back from Mexico and that it came on government planes. Now, we are also learning from this indictment that he and his wife allegedly used armed guards to protect cocaine shipments and that they maintained state-sponsored gangs to facilitate the operation. And when people did not pay or were threatened, business members were kidnapped, beaten, or even murdered. Now, this is a massive scale. By 2020, the State Department estimated that there was about 250 tons of cocaine moving through Venezuela every year. Also charged is their son, the interior minister, and a gang leader. Now, Maduro is represented by Barry Polk. That's the same lawyer who represented Julian Assange, and the judge ordered him held without bail today. Trial won't happen until 2027.
Myles Miller on the ground there in Lower Manhattan. Of course, the next big hearing in this case comes in March. In the meantime, though, we are keeping an eye on markets where commodity prices are all over the map. U.S. Energy Secretary Chris Wright reportedly planning talks this week with oil industry executives about reviving Venezuela's hobbled energy sector. Amrita Sen joins us right now, founder of the consultancy Energy Aspects. And Amrita, before we get to that meeting, I just want you to give me some perspective here as to why we're seeing so much strength right now in oil and other commodities prices. Is this just the idea that we're going to see a lot more of these products on the market?
Well, if that's the case, then prices should be falling, not rising, right? So I think what we have seen is a little bit of a dichotomy, right? In the morning, we had prices down, mainly because generally the expectation in the market has been there will be more Venezuelan oil. It might take a while, years, if you ask us, and I think it'll be a trickle, not a flood. But the expectation has been more oil. But then over the course of the day, we started to rally, in part because if you look at the very short term, the U.S. blockade remains in place, sanctions remain in place, Venezuelan exports have already halved, and the risk is actually that we get even a bigger decline right now. So if anything, the short-term story is bullish. That's why we've seen the rally, also because the market is actually really short. The biggest short position in 10 years in Brent. And I think that's it's a technical move because ultimately we are in an oversupplied market. So we shouldn't be looking at any significant price rallies.
I am curious, Amrita. I mean, how much did Venezuela's oil sales actually contribute to what we see publicly in terms of prices, whether you're looking at Brent? Because, I mean, technically, they're not supposed to be selling a lot of that oil because of the sanctions. So I am curious as to how much of that is actually even reflected in the public prices.
It's a great question. I mean, is Chevron's allowed to take back the oil to the U.S. Gulf Coast? It's about, call it about 150,000 barrels per day. I'm rounding over here, but that's a tiny proportion. The bulk of the oil, they were producing at the peak about 1.1 million barrels per day last summer. Obviously, it's now fallen a few 100,000 barrels per day since then. But let's say about exports of, sometimes close to 1 million, but about 800,000. Barring the bit that goes to the U.S., everything else goes to China, where they sell it at significant discounts, sometimes $20, $30 under Brent. But this is the oil that the Chinese independent refiners buy, the smaller teapots, as they are called, and they, rake in a huge profit. And remember, Venezuela does owe China a huge amount of money. They have a lot of debt, and they are effectively paying back loans China had given them since 2017.
And Amrita, let's talk about the oil reserves that Venezuela is sitting on. It's estimated that that's about 17% of global supply, which is the largest in the world. But you think about the type of investment, the magnitude that we're talking about to bring back output basically to those 1970s levels. By some estimates, that comes in at about $10 billion a year. I wonder whether, you agree with that assessment, whether those numbers sound right, and whether you think that's a realistic goal, returning to those types of output levels.
Firstly, I'd say take every estimate of reserve with a giant pinch of salt. A lot of, and particularly within OPEC, everybody has an incentive to talk about higher reserve numbers because that's how quotas are based. Ultimately, what matters for the market is production levels, and Venezuelan production hasn't even been 2.5 million barrels per day, which it was at the start of this century, right? For a long, long time. And like you say, and that's the biggest issue with Venezuela, the dilapidation in the upstream is so extreme. The damage to equipment, the loss of personnel. We are talking, and this is a very, very heavy crude oil to produce, right? It requires a lot of diluents, which is essentially naphtha or light crude oil to make it flow. So we are talking about significant investments. Our own analysis shows just to raise production by 500,000 barrels per day, it would take a minimum of 2 years. And we are talking about at least $10 billion, if not more. So if you're talking about, let's say, going back to 2.5 million barrels per day, it's more than hundreds of billions of dollars, and it could easily take 7-10 years, even longer, right? So this is a very long-term, slow process. Remember the debt PDVSA has as well, which is huge. So no company is actually going to be jumping up and down to go back. The terms need to be iron tight, by the way, right? So it's not going to be easy.
Well, that's what I was wondering as well. Who exactly is going to be doing the investing? We heard from President Trump saying that, quote, we're going to have our very large United States oil companies, the biggest anywhere in the world, go in, spend billions of dollars, fix the badly broken infrastructure. But, Amrita, I mean, you think about investing in Venezuela, it sounds like you don't quite believe that those oil majors will be so eager to funnel all that money in.
No, and I think they've commented publicly as well in our conversation, suggests the same, that, they are not really expecting to go in tomorrow. I mean, let's look at, firstly, who is even in power in Venezuela right now. It still is a Maduro regime that is in power. So if you step back, other than Maduro not being there, what has changed? They need to look at the contracts, because imagine they do go in and down the line, another or different Venezuelan government just doesn't honor it. Then what? They've spent the billions of dollars, which is exactly what they have done in the past as well. And then they've lost that because then they were thrown out. So this isn't a simple, it's easy for politicians to talk about it, saying that, yes, the companies are going to go in and fix it. But companies have shareholders. They have to care about returns. The investment required, the numbers we're talking about, is more than the capex of, some of the biggest U.S. majors have pledged over the last couple of years. So the numbers just don't add up.
All right, Amrita, great to get some time with you. Really appreciate it. That is Amrita Sen. She is founder over at Energy Aspects. Meanwhile, for more on what's next for Venezuela now that Maduro has been removed from power and what this means for the C-suite in the oil sector and beyond, let's go to Kevin Kajiwara. He is co-president of Political Risk Advisory over at Teneo. Kevin, great to see you in person.
Hi, Katie. Good to see you.
So let's pick up exactly there. I mean, you think about the investment, not just in the oil sector, that President Trump is talking about for Venezuela. In your conversations that you've been having with the C-suite over the past few days, what does that appetite look like at this point, given the very large questions that are lingering over this situation?
Well, I think you teed it up perfectly there, Katie. On the one hand, every CEO out there recognizes the economic potential of Venezuela, also the economic history of this country. It's one of the wealthiest countries in the world in the last century. But I think they are all incredibly realistic also about the challenges that are in front of it. This is not the first country, even hydrocarbon-rich country that we have seen that's had enormous compromising of its economic base over years of mismanagement, as well as sanctions, et cetera, et cetera. To turn the promise into reality is a pretty long trip. Not to mention the various questions that still have to be answered, as your previous guest Amrita just said. Right? We don't really know what the status of the regime is right now and the nature of its relation with the U.S. administration, what the status of the military and the security services. The opposition has been sidelined, but remember, only 18 months ago, 70% of the electorate voted for that opposition. So, we've seen situations like Iraq, and I know that there have been a lot of there's been a lot of commentary over the last several days comparing this situation to historical precedents like Panama and Iraq and the others. And you can blow holes through all of those arguments. But nonetheless, it still rhymes to a certain degree, right? And at the end of the day, the Iraqis welcomed the United States in. Thank you very much for getting rid of Saddam. But hey, when you want the oil or you want to, run us in a way that we're not happy with, we're going to push back.
And we should just point out, there's still a big loose end with regards to the leadership of this country, unlike Iraq and Panama, where you effectively had the U.S. take over. You have Maduro's vice president being sworn in earlier today, and presumably she's still in charge, Katie.
Yeah, absolutely. Yeah. We saw the National Assembly inaugurate Delcy Rodriguez as acting president on Monday. She's made conciliatory sort of gestures, statements towards the United States. We heard from President Donald Trump saying that he's going to work with Washington to, quote, make Venezuela great again, as we start to see this relationship sort of solidify or evolve between Venezuela, the acting president, and the Trump administration. What will you be watching for? What will your clients be watching for?
Look, I think the clients are going to be watching. Number one is, how much visibility do you have on the runway of the operating environment in Venezuela? And you made a very important distinction there when you said that she was just sworn in as the acting president. She was not sworn in as president, as the Constitution holds, right? So in other words, the regime is still holding to the principle that Maduro is the legitimate president of the country. The other thing I would note is that this is not a typical strongman regime. It wasn't just him and then everybody else. It's actually kind of a gang. They are a group together. And remember, she is a lifelong member of the Chavismo movement. And so it's unclear whether we're going to see fissures in this, whether she is going to get pushback from Chavismo hardliners about being too acquiescent to the United States. I think, we're only, less than 72 hours into this. And I think, there's a large question mark about what's going to happen next.
And with that sort of asterisk that we're basically 3 days into this, I am curious, though, do you think that company executives would be willing to actually engage economically in Venezuela, even knowing that there's a possibility that whatever regime, non-U.S. regime, does end up taking control? Are they going to be permanent? Is it going to be stable? Are they going to have those types of questions?
Look, I mean, the economic potential, the size of the country, and so on and so forth have got to force you to do your homework here to a certain degree. And obviously, different companies in different industries have different risk tolerances and different abilities to measure that risk as well. But as Amrita just pointed out, you're going to be making a contractual arrangement with the regime that's in power right now. And again, the legitimately elected government has not been put into power. If they should come to power down the road, what will the sanctity of those contracts, look like at that point? I also think,
we need to look out. I mean, we went down this road before with Chavez. I mean, there were contractual obligations that he basically ripped up.
Right. And remain, when you get out of the hydrocarbon and other extractive industries and you look at the status of this economy and how dilapidated it is now and so on and so forth, there's a long way to being able to build up that consumer class again. Because it's going to take a while to realize, even if everything works perfectly, to realize the financial gain of energy sales.
With regards to the geopolitical risk of doing this, I mean, let's say we do get a true infrastructure build, a commodities infrastructure build out there. Price tag that Bloomberg has put on is at least $100 billion to do that, which would largely be funded by a lot of the private companies. But it gets to this idea, is there geopolitical risk in the idea that the U.S. would basically be spearheading this rather than Venezuelans themselves, if you know what I mean?
Well, there's a 19th century concept of gunboat diplomacy, which obviously is getting thrown around here a lot. But I also think that multinational corporations are operating in a lot of other parts of the world. And remember, if the U.S. takes the position that this oil is somehow ours, and again, we don't know what the Venezuelan street is going to push back on or how they are going to regard that necessarily. But there are other countries in the world where U.S. companies are operating who may take a very different view on what's under the ground in those countries. So I think it's got huge geopolitical ramifications. And I think we've talked about this on this show before, Romain, that the operating environment under the feet of CEOs and boards right now is shifting in a way that it hasn't in many, many years. And, I think that this is a dramatic data point in that continuing saga.
And we only have about a minute left, but you think about those geopolitical ramifications. There's a lot of questions about what this means for other countries and how they position themselves. You think about China with Taiwan. You think about the questions about Russia and Ukraine. And I wonder, where you fall on that.
I mean, I think this notion that we're falling into a spheres of influence kind of a world is certainly music to the ears of both China and Russia. It actually comports with their worldview. But again, our allies are also having to consider what this means. The president obviously put Colombia, Cuba, even Greenland on notice over the course of the weekend. I think we need to look at the national security strategy that was issued only a month or so ago, and people ought to reread it and take it seriously. So, there are a lot of changes in the global operating paradigm right now that none of the current stock of CEOs and board members and whatnot have ever actually gone through before.
Yeah, and I feel like we're going to have to talk to you a lot this year. I thought we were through all this in 2025, some of the geopolitical risk. Absolutely. Well, in 20 days, apparently, we'll be talking about Greenland. Kevin, always a pleasure. Kevin Kajiwara is the co-president of Political Risk Advisory over at Teneo. We are going to get back to that story on Venezuela a little bit later in the program. But when we come back, we do want to focus in on autonomous driving, the CES show kicking off in Las Vegas. We're going to catch up with the CEO of Kodiak AI, Don Burnette. And he's going to talk about his latest partnership to scale driverless truck technology. This is The Close on Bloomberg. All right, welcome back. We want to talk about the world of autonomous driving. There's a company out there, Kodiak AI. It makes driverless tech, which it says it's committed to helping to build the world's safest driver. It's partnering with automotive giant Bosch to build out its trucking operation. Bosch will provide Kodiak with manufacturing expertise and scale, and that's in exchange for a chance to get in and learn from the AI craze. Joining us right now is the founder of Kodiak AI, also the CEO, Don Burnette, who joins us from the CES show in Las Vegas, just kicking off today. Great to have you here, Don. Let's first just talk about this idea of exactly what you're presenting, and more importantly, Don, how far along is this technology?
Well, this is a really exciting announcement for both Kodiak and the overall self-driving trucking industry. You have, on one hand, the global leader in automotive component supply in Bosch, along with Kodiak at the forefront of developing and deploying production-level driverless vehicles at scale, coming together with a shared vision to scale autonomous trucking into the future. And where we're at today, coming out of 2025, where we deployed, at least as of Q3, 10 driverless trucks to our launch customer. Those are trucks that have nobody inside, that are operating 24/7, day and night, rain or shine. And we're looking to scale that into 2026 and beyond. And Bosch is the right partner to help us do it.
What do you think the adoption, at least in the short term, will be, given some of the costs as well as some of the concerns about the reliability of the technology?
Well, we're really constrained today by manufacturing capability as opposed to demand. I think people are really excited about this technology. More and more Americans are getting to experience self-driving firsthand. I think the acceptance of the technology is definitely on the rise. And so we hear from customers every day that they want this as soon as possible. And so really it's about validating the safety, ensuring that the system works at a level that meets expectations of both the company, the regulators, and the general public, and then bringing that to adoption at scale. So we're still at the very early stages of starting to bring it to the market, but we are finally in production. We have driverless systems out there operating safely. And as people become more comfortable with it, I think you're going to see a real acceleration of that adoption.
Well, Don, to that point, I know that you're looking to expand your on-highway capabilities. Specifically, I know that you're targeting driverless highway operations in the second half of 2026. 2026 just started. What's your confidence that you'll be able to deliver on that promise?
We feel very confident in our ability to pull the safety observer in our highway operations. We do daily operations for self-driving technology on the highway, working with some amazing partners out there 7 days a week. We do still have a safety observer behind the wheel, and we're, as you said, expecting to remove that safety observer in the second half of the year.
And you think about what sort of funding you'll need to get there. I know that you went public in September through a merger with a SPAC. Since then, your share price has been a little bit choppy. But talk to us about sort of the investment that you'll need, what it'll take exactly to get there.
Yeah, it's still early days for Kodiak. It's early days for our stock. We're really focused on the long term. We're focused on shoring up our fundamentals as a company, continuing to hit the milestones, delivering the technology to our customers. Really, that's the final validation on how successful we're going to be. And so far, we think we've been very successful at the early stages of deployment. At the end of the day, we will look for strategic opportunities to raise capital down the line. We feel like we're in a very good position coming out of the end of the year, and certainly bolstered by this announcement and partnership with Bosch, again, the leading supplier of automotive components in the world.
I have to ask you a sensitive question here, Don, and it's really about the idea of managing investor expectations. Without saying the name, of course, there was another well-known company that presented at CES way back in the day and ran into some issues with overselling its driverless technology. How do you sort of manage expectations, not only for yourself internally, but for investors and potential buyers?
I think that's a lesson that we've all learned as we have observed this space. I've been in this industry for nearly 17 years, so I've seen all the ups and downs. I've seen all those promises and broken promises over the years. And Kodiak has always maintained a very realistic set of milestones. We've been able to achieve our milestones over the last 8 years of the company. And I think it's the trust that we're building with investors and have built over the years that allows them to have confidence that we continue to hit our milestones. At the end of the day, we need to prove a quarter after quarter that we're going to continue to grow. We're going to continue to hit those milestones and meet expectations. And that's on us. That's an execution thing. And we feel like we're in the driver's seat and ready to do that.
All right, Don, really appreciate your time. That is Kodiak AI founder and CEO, Don Burnette. And if you're down at CES, you can see one of Kodiak's autonomous trucks on display at the Bosch booth. And be sure to catch BTEC's live coverage of the conference starting tomorrow at 11 a.m. Eastern. Meanwhile, a quick check on these markets. Of course, we've been focusing heavily on that geopolitical risk. What's going on in Venezuela? It doesn't seem to be on the minds of U.S. equity investors. You take a look at the S&P 500, higher by 0.7% right now.
Yeah, look, we've said this before. Financial markets are pretty calculating. And at the end of the day, it's how does this actually actually affect the valuations of the company, of publicly listed companies? And at least as of right now, not a whole lot. Maybe to the upside for some of the oil companies, but for everyone else, not a huge impact.
Certainly, that seems to be percolating through the markets right now. But coming up on the close, we'll discuss the future of the U.S.'s stance on AI regulation. We're going to do that with Tim Wu of Columbia Law School. This is The Close on Bloomberg.
3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Boston.
And I'm Katie Greifeld. We're taking a look at these markets, 30 minutes to go until the bells ring, and what a rally we have on our hands. And we should point out in particular what's going on in tech right now as measured by the NASDAQ 100. Tesla, Amazon, Palantir, some of your biggest gainers on a points basis today.
Yeah, I mean, tech has been the main driver of this market, certainly in the most recent bull cycle, for the last 3 years now. It lost a lot of steam at the end of the year, but some big questions here about whether anything else can really carry this market. We need Amazon, we need Meta, we need Apple, et cetera, to continue moving higher for the broader market to do so. But the big question is, should they be moving higher?
Yeah, that's the thing. I mean, you think about the math of the indexes. To your point, we need big tech to perform. This market has been in love with the AI story, and we'll see what...
Remember when we all used to hate big tech and we were going to break them up and all that? We just don't talk about that anymore.
Well, there's some in the government who would still like to do that. Let's talk about this with someone who is an expert in the tech space, having served as a special assistant to President Biden for technology and competition policy. Tim Wu, he's a professor of law, science, and technology over at Columbia Law School. He's also the author of The Age of Extraction, How Tech Platforms Conquer the Economy and Threaten Our Future Prosperity.
That's
Tim,
quite the title.
It's great to see you on set with us.
Thank you.
So Romaine sent me this article literally in the commercial break coming out of the Financial Times today. The headline, the U.S. is losing its battle to break up big tech. I wonder if you agree.
Well, I think the battle's not done yet, but they've certainly had some setbacks. I mean, part of the big idea in our administration is we needed to push big tech back a little bit. Maybe they were taking too much, as you were just saying, being too much of the economy, too big a bet. So I think that the suits are not entirely done, but I do still think it's important to keep some watch on the big tech so they don't extract too much from the economy.
Well, the pushback to that from certain folks that I've heard voiced is, why would you want to break up U.S. big tech? I mean, you think about the U.S. economy, U.S. markets, and big tech is the crown jewel and really differentiates the U.S. in that regard. And there's the argument out there that maybe they should stay in place.
Well, if you look at the longer cycles of industrial history, I think that in the long run, too much domination of a sector by too few companies has a bad track record. If this was the 1950s, we'd be saying General Motors, they're the greatest, they can do no wrong. We'd be saying Boeing, we need to leave them, don't mess with Boeing. We'd be saying IBM, don't mess with them, AT&T. But the fact is that when you have a company dominating a sector for too long, they start to stagnate. And so I think you've got to constantly keep at them. Look, I'm not saying that big tech has reached the state of Boeing, but I'm saying it is a duty of the government to constantly make sure that the sector stays lively and competitive, not stagnant.
There was always an argument with regards to this sort of iteration of big tech, the idea that, yes, these companies were large, in some cases monopolies or quasi-monopolies, but the idea was that the products and services they were putting out were effectively lowering prices for consumers in some degree or another, or offering some sort of conveniences that we would not have gotten. At least that's the argument they've certainly made in court as well. And I am curious, does that not hold water? I mean, there are a lot of things I'm paying for today that are probably significantly cheaper than what they would have been on a relative basis 20, 30 years ago.
I mean, it depends on whether you're an advertiser or not. I think we had this conversation with the advertiser. They say, look what I'm playing to Facebook and Google. Advertising duopoly, it's outrageous. I need a little more competition in this space. They've got it locked up. So I think it really depends. I mean, the genius has always been to make it look good for the consumer. But there's a lot of other parts of the economy, I think, that are being affected by big tech's monopoly power. All the companies have to advertise. You take another, just as an example.
But it gets to this idea, and it goes back also to that FT article, why we haven't seen more success in this space. I mean, during the Biden administration, which you were part of, obviously Lena Khan led the charge on a lot of the stuff there. I mean, she went after a lot of companies. she didn't successfully win any cases against them.
Let me back up. That's wrong. Google lost its case.
Okay.
Google was held to be a monopolist and lost its case. The only case
I haven't seen any change, though. When I say failed, I don't necessarily mean you got a judge to say we side with you, but what's been the consequence?
I think if you look at the space that AI has had to grow, okay, look at OpenAI.
Okay.
You want a consequence? OpenAI is the consequence of pushing back Google.
Okay.
I mean, it's not the only factor, but you think what would have stopped Google from just either, or Microsoft? Microsoft has, let's say, what would have stopped Google from either buying OpenAI or pushing Gemini into every single space? I mean, maybe you would have said, well, OpenAI is a better product, but I'm just trying to say, pushing back Google has had a big role in OpenAI's success. You want to look at something, that's your marker.
Well, the Google case, let's talk about it a little bit more, because something I wonder coming out of that was whether or not AI is basically going to solve this problem for you, so to speak, whether or not that's going to, quote unquote, break up big tech. Because you think about that ruling back in September against Google, the judge declined to order a divestiture of Chrome or its Android operating system. And the logic was basically that the emergence of generative AI has changed the course of this case. And Google's a big example there, but there must be others out there as well.
It's always a dual operation. If you study the industrial history of U.S. antitrust, there's always a little push by the government and then room to grow.
Yeah.
If you look at Apple and you look at Microsoft, they grew because the government pushed back AT&T and pushed back IBM. So what the government does is it gives a little push, and it doesn't do the growth. It leaves room for other companies to grow. In the case of Google, in the case of this entire war, I mean, if you want to look at the byproduct, it has been the independent AI sector. And I think that is the most important thing that's come out of our effort.
And also, just in fairness to you, your administration, and Lina Khan, I mean, obviously, just the threat of that oversight certainly prevented some companies from moving forward. But on that point, though, we've seen underneath the surface. I mean, a lot of people focus on whether Alphabet's going to buy some other gigantic company, and that becomes the antitrust issue. But when you have these companies buying smaller companies that sort of fly under the radar, they're not big enough to really sort of, you know, get the attention of regulators. And we've seen these companies build themselves up through these smaller acquisitions to the point where they might as well have just gone out and bought a big company. How do you combat that?
I mean, I think that's a problem, honestly. I think we have, at times, allowed some of the big tech companies to own too many of the sort of talent pool individuals who would be in another era those who would challenge the big guys. Look, I'm not against tech. I'm not against growth by any means. I just think the American tech has been successful because there's a cycle of challenge, of entrepreneurship. And I do think it's important that we don't let the big guys buy every single entrepreneur.
Are the laws and regulations in place today sufficient enough to address that?
They would be if the judges enforced them. You know, I think we could improve the laws. I think they have not always been as strong as they could be. But I mean, it's constantly a balance. And I just want to say it's a push and pull. The U.S. tech sector, in ways, is successful because the government has always been on the side of entrepreneurs.
So we're talking, of course, about the tech sector. You say that you're not against big tech, but you think about these sort of antitrust concerns, these monopoly concerns. Is it unique to the tech sector at this point?
No, not at all. I mean, I think some of the worst, most concentrated sectors are outside of tech. You know, agricultural seeds, just to take a random example. Parts of broadband are very concentrated. You know, it's often very unglamorous industries like farm tools or something like that, that frankly could use a little shake-up, frankly have allowed too many anti-competitive mergers.
Glamorous to someone out there.
Yes,
certainly.
that's true.
Yeah.
Glamorous to someone. But then just to kind of circle this back, too, and the way Katie kind of framed this, too, is just the importance of these companies to our economy, for better or for worse. They contribute a lot to GDP. They contribute a lot to hiring and labor growth. So how do you approach the potential for either breaking up these companies or constraining them without also constraining the economy?
I think it's important. I think the track record of competition is better than the track record of monopoly. So I think that we become enraptured and in love with big companies. And look, they're certainly impressive. Their leadership, their talent is impressive. But the long course of American capitalism has always been more successful with competition and not with monopoly. And I just go back to the 50s. I go back to the 70s. Do we really want General Motors, Boeing, like AT&T and IBM to be the future of the U.S. economy? Or do we want to have a more competitive, vibrant kind of economy?
Yeah, certainly a valid argument. Tim, I have to leave it there.
Sure.
Always a pleasure. Tim Wu, one of the brightest minds on this topic. Julius Silver, professor of law, science, and technology at the Columbia Law School. When we come back, we turn back to the big story of the day, quite frankly, of the last 3 days, and that's the seizure, the ouster of Venezuela President Nicolas Maduro. We're going to talk about the impact on market prices, specifically oil prices and oil stocks. That's coming up next in our Stock of the Hour. This is The Close on Bloomberg. Time now for our Stocks of the Hour, and we're taking a closer look at the oil sector. Chevron, Exxon, Conoco, adding to the group's gains as investors digest President Trump's plans to try to revive Venezuela's energy infrastructure following the ouster of President Nicolas Maduro. Joining us right now to unpack this is Bloomberg Markets correspondent Norah Mulinda. All right, Norah, we're seeing a lot of these oil stocks rallying on the day. Oil prices are up 1% or 2%, but I'm a little confused. I mean, is oil flowing now, or what's happening?
So this is more or less an access trade. It's not necessarily an oil price trade. That's why you're not really seeing crude prices spiking. It's stocks that we are seeing that are rallying. So this is essentially people betting on the future, because we know that this is actually going to be a multi-year process if we think about the idea of full reception and getting this up and running. So it's not something that's going to be happening tomorrow, but this is essentially investors getting out here and essentially pricing in on the long term.
Well, you take a look at the oil stocks that are moving, those oil equities. There's a clear winner here. That winner is Chevron. Shares higher by about 5.3%. Tell us why exactly.
Well, Chevron, we know that this has actually been a company that has still been in Venezuela when we look at the broader U.S. major oil companies. And so we think about the fact that Chevron essentially has an edge on all of its competitors. It has boots on the ground, if you will. So essentially, it has like a quiet advantage in comparison to a lot of its competitors. So that's why you were seeing this as the front runner stock ahead of a lot of its other peers throughout the trading day today.
And it gets to this idea, though, too, and we should also point out, even outside of oil, you're seeing a lot of gold miners rally. We kind of forget that Venezuela has a huge supply of that. But it gets to this idea as well as to, are investors prepared to wait? I mean, I know it's only been 3 days since, this whole operation, and it's going to take months, maybe even years, to see real material benefits in infrastructure. Are investors prepared to wait that long?
And I think it's interesting that you point this out, because we're actually seeing a lot of the energy services companies that are actually rallying off of this, because it's going to take some time for this to actually be fully ramped out. So we have to think about the fact that investors will ultimately have to wait in this situation. And so you're hearing a lot of my sources, people on the street, really thinking about this bet on the long term. But that's why you are essentially seeing a disconnect between what we're seeing to be the oil stocks and their performance on the day versus potentially, the oil prices, if you take a look at crude, for instance.
Yeah, absolutely. An interesting sort of who is winning here, especially versus what we're actually seeing in the underlying market. That is our Bloomberg TV and markets correspondent, Norah Mulinda. It's interesting, too, Romaine, we were having this conversation with Amrita Sen, whether or not the oil majors were going to have the confidence to actually invest in Venezuela. Exxon has previously said it would look at investing in Venezuela under the right conditions, and you have to wonder what those are under the current environment.
Yeah, and I'm a history nerd. I think for anyone who's looking at today, what happened over the last 3 days, I think these oil companies are going to rush back in and start to build out infrastructure. They need to go look at what happened under the previous regime and the regime under that. Everything that happened under Chavez, those contractual agreements, they're only good as worth the paper they're printed on.
Yeah, I'm sure there's plenty of history nerds on payroll at some of those oil majors. Coming up next, though, we have the closing bell.
I've never been to Venezuela.
Really? Me neither. No. I don't know. Maybe in the future. Coming up, Dana D'Auria. She is Co-Chief Investment Officer and Group President over at Envestnet Solutions. Closes next. This is Bloomberg.
If anything, the short-term story is bullish. That's why we've seen the rally. Also because the market is actually really short. The biggest short position in 10 years in Brent. And I think that's it's a technical move, because ultimately we are in an oversupplied market. So we shouldn't be looking at any significant price rallies.
Amrita Sen, founder of Energy Aspects. You kicked us off to the close just about 50 minutes ago. Normally, we focus pretty heavily on what's going on with big tech, industrial stocks, but today it's really all about the moves that we're seeing in commodities and those commodity companies.
Absolutely, and it was interesting to hear her explanation for why we're seeing crude prices rise right now. A little bit unintuitive, especially when you think about the medium-term outlook, but certainly a bump in crude today. You can see it at the bottom of the screen there, higher by about 1.8%, matching a rally that we're seeing in U.S. U.S. equities right now. The S&P 500 up 0.7%, one better when you take a look at the NASDAQ 100, higher by 0.8%. And I said this at the top of the show. I'll say it again. I'm never going to do this again. But you have the Dow Jones Industrial Average on the board right now because it's at a record high, up 1.3%. A lot of that comes back to Chevron.
Yeah, absolutely. You're seeing those names get a really strong bid on the day. We should also point out Halliburton having a phenomenal day, up more than 8% here, now headed for their best day going back to October. Dana D'Auria joins us right now. She's the co-chief investment officer and group president at Envestnet Solutions, helping us count you down to those closing bells, which are, well, just about 8 minutes away. And Dana, we came into this year, with, I think, a big focus on big tech. There was also, of course, somewhat of a focus on geopolitical conditions. As you sort of balance those out, based on what we know here on this January 5th, what do you think ends up being a little bit more important for investors for the rest of the year?
Well, I think it's got to be big tech. Unless something changes dramatically, I think the market will largely look past what's going on in Venezuela. I think, the kind of saber rattling that you're hearing with respect to other countries, never say never, but we all know the Trump administration likes to take negotiating positions and will use the action in Venezuela as a negotiating position and sort of to, kind of expect more out of other countries. But that doesn't mean that we would expect to see military action in those other countries. So unless you really see this start to bleed out, I think, the action in Venezuela alone doesn't, move markets much. And you started the segment with where it is. For most U.S. investors, it's really the Chevron allocation that's going to have any impact whatsoever, right? Venezuela being closed, there's not outside investment there. Yeah. U.S. investors don't have to worry about, there's not systematic risk coming from this other than, again, if it got bigger, if we actually had the possibility of more action, then yes. But other than that, it's specific stocks that benefit, defense stocks, right? Gold will, it'll be supportive of the gold case, obviously. But for the average investor, far less significant than what goes on with AI and big tech and this whole trade around CapEx.
I am curious, though, about the balance that we're going to see in terms of allocation, because one of the hallmarks of last year was you had this massive rally in risk assets that seemed to be, to a certain extent, embraced by investors. But there was also this huge bid into non-risk assets, you will, safe havens like gold and silver, like treasuries. In fact, most, when we look at across the bond landscape, whether it's government or corporates, having one of their best years in 2025 in quite some time. Does that continue, this sort of dichotomy between an embrace of risk assets and at the same time holding on to those safe havens?
Yeah, I think the market has sort of carved out this barbell position now, and you're absolutely right. To a certain extent, when you think about something like gold, some of the expectation in play there obviously is just inflation. And so there's a question around, do we still have as much concern in the coming year around inflation? And, does that continue to buoy the gold, the silver case, et cetera? And that's all tied, of course, with what happens with interest rates and, in terms of spreading your dollars effectively for diversification purposes. One of the things you obviously want to look at is, well, what do we think is going to happen with rates? So obviously, if inflation perks up and, that's another reason potentially to be in gold. But you're also then looking at higher rates and what does that do in terms of an impact on growth. And so I think that to a certain extent explains why you're seeing sort of this barbell effect. We know there's a good case for growth for this coming year or for the year that we're in. I still have to get used to that 2026. But at the same time, there's geopolitical concerns, there's inflationary concerns, and gold is a safe haven.
Well, you think about some of the factors that might be driving gold, inflation being one of them. Does that explanation map onto what we're seeing with Bitcoin, which has had a fantastic start to 2026? Or what do you make of what we're seeing go on in the crypto space right now?
I see crypto more as the risk on. I don't see it in the gold camp at all. I've never really understood that argument for it. I get, there's an argument to be made that it's a currency. I think most people who are in crypto are in it for the run up, at least from the perspective of, investors, right? Retail investors. that a company like ours caters to. And so, they're in it for the potential returns, and you can achieve the potential returns completely outside of using it as a currency. In fact, it's probably the best way to do it, right, is via an ETF at an established financial institution. So to me, crypto's a risk-on asset. It's following along with what you're seeing in tech. It's following along with what you're seeing in growth. Gold is, an entirely different play. Gold is sort of the ballast that people are putting in, to protect against on the downside.
So different buckets here when it comes to gold and crypto. I do want to talk about what you see as being the driver of this year when it comes to the stock market. You mentioned that focus on CapEx. That certainly has been a theme, but how do you see sort of the tug of war for market attention when it comes to what we're seeing with the Federal Reserve and weighing that against what we're seeing from corporate America?
Yeah, look, I think a lot gets determined this year in terms of whether the AI trade actually pays off in the short term. I think we've got enough concern around the CapEx, the continued, and by the way, this doesn't mean that I don't think, there's plenty of access to capital markets for companies for AI. I think that will continue for a long time. But I do think, to a certain extent, there's an expectation that productivity is going to start to increase as a result of AI, that rather than just sort of the makers of AI, if you will, and all the surrounding infrastructure for AI, you're also going to start to see AI filter into the general economy and the users of it start to pay off. And I think that's the question that we're going to need to start answering in 2026. It doesn't mean, I think, if we don't get a positive answer, that this is not a transformative technology that ultimately will lead to these types of benefits, hopefully, right? Probably, but it doesn't mean that in the short run, you see that, and therefore you experience good returns in the stock market.
All right, Dana, I have to leave it there. Always a pleasure to catch up with you. Great way to start the new year with Dana D'Auria, Co-Chief Investment Officer over at Envestnet Solutions. As we get closer to those closing bells, stocks holding on to a big chunk of their gains on the day, Katie.
And I just have to point out volume right now on the S&P 500
it's
trading
higher?
Volume 29% higher than the 30-day average. Of course, those 30 days did include some
That's my happy dance, the penguin dance.
I love it.
Shout out to Tony Kornheiser there as we move closer to the closing bells here on this Monday afternoon. Full market coverage of all of today's market action starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Katie Greifeld, taking you through to that closing bell with a global simulcast. Carol Massar and Tim Stenovic join us from the radio room. Welcome to our audiences across all of our Bloomberg platforms, including all of those folks watching us here on YouTube. The majority of the stocks, Carol Massar, in the S&P higher. But this is not a broad-based rally. This is about oil stocks. It's about defense stocks. To a certain extent, Carol Massar, it's about financials.
Yeah, absolutely. Right as we get ready
Did you just twist your head at me?
Which one? Which one of us? No, yeah, it's obviously, the trade off of what happened in Venezuela over the weekend, no doubt about that. But I will, having said that, you are also seeing semiconductors higher. The SOX is up about 1%. And the MAX 7, we saw some outperformance also during the day. So investors willing to take on some risk here on this Monday.
Not all energy stocks are higher, though, on the day. There are those domestic producers here in the U.S. that are focused on shale. Perhaps we're seeing a rotation out of some of those names. I'm thinking Diamondback, APA Corp, Devon Energy, and more.
Yeah, no, it's a good point that it's not blanket good news for some of these energy names, but certainly that's being overwhelmed by some of the giants that you're seeing put up really impressive gains today, Romaine.
But it's also interesting, too. I mean, I know Tim is trying to be a Debbie Downer here, telling us all that's falling, but when you think about this idea of the oil services sector, so take the OSX in Philadelphia. I mean, that's having its best day in quite some time, I think since April of last year, now at the highest levels in quite some time. You got financials at record highs, just a few days before the next earnings season kicks off. And then those aerospace and defense stocks also at record highs, having their best day going back to that post-Liberation Day move higher. So maybe some optimism if you're picking and choosing, or if you want to follow Tim Stenovic. little bit of pessimism.
Or you could have just talked about the Dow Jones Industrial Average actually hitting a record intraday, and maybe we're here at a record close, too.
Katie has mentioned that several times today.
Against my will.
Yeah, and against
Nice
my
job,
best
Katie.
wishes as well. But thank you for that, Carol Massar. The Dow Jones Industrial Average, as Carol Massar just told you, up almost 600 points on the day, about 1.2%. The S&P adding 40 points, or about 0.6% on the day. The NASDAQ Composite up about 0.7%. But your outperformers today, you're going to find that in the small, mid-cap, and cyclical spaces. The mid-caps up about 1.3%, transports up 1.2%, and the Russell 2000 adding 1.6%.
All right, back to the big caps I go. S&P 500, as Romaine mentioned earlier, most names in the S&P higher today. 341 names, Katie, to the upside, 161 losing some ground, 2 unchanged.
Well, let's go talk to the Circle about it. The first time checking the Circle in 2026, and boy, it's actually really interesting today. Up top, well, you don't exactly see that. Big tech, of course, we have to acknowledge that. That is one of your biggest losers when it comes to a points basis. That's why it's highlighted. But overall, what a day that you saw for energy, that you saw for financials, consumer discretionary also catching a bid. 7 sectors in total finishing in the green. A different story when it comes to the downside. We talked about tech, but utilities, your biggest losers on a percent basis. Consumer staples falling as well. This was a risk-on day.
All right, so let's get to, Katie mentioned certainly the energy outperformance as a whole. So let's go through some of the names that definitely gained in today's session. Of course, the news, President Trump pledging to revive the Venezuelan energy sector following the capture of that country's president, Nicolas Maduro, over the weekend. Valero, we saw that one up about 9% in today's session. Formerly Schlumberger, now SLB, that one was up about 9% in today's session. Halliburton up almost 8%, and Chevron up about 5%. Of course, very key in terms of its positioning and exposure there in Venezuela. I should point out, Siebert Financial's Chief Investment Officer, Mark Melick, put out a note, and he said the U.S. Gulf Coast refiners with years of experience building and optimizing refineries to handle that heavy Canadian crude stand to benefit in the event changes in Venezuela restore output of that country's heavy sour oil. So that's why you saw names certainly like Valero and others, and some of these major integrated oil companies who can handle all of that. All right, now
did you see that interview that Michael Burry gave? I think it was to CNBC about his bet on Valero that I guess he said he entered into back in 2020.
No.
Yeah.
And would it?
Yeah, check it out. Yeah, basically saying not that he saw this coming today, but the idea that he thought he saw some potential all the way back in 2020 for a big infrastructure shift in Venezuela.
Oh, well, that's interesting, right? But we'll see. Like, I'm sure you guys have had the conversation, the amount of money that's going to take to kind of rebuild Venezuela's energy industry. It's going to take a lot. It's going to take some time. It's got to have companies that are comfortable that there's going to be political stability and maybe a democratic or business-friendly environment. Hey, courtesy of Tim, he talked to me about the nuclear fuel makers that were rallying. They got a total of $2.7 billion from the U.S. to restart production and wean the U.S. off enriched uranium. So the companies impacted, ticker LEU, Centrus Energy. They're based in Maryland. They got money, and they're up 10% in today's session. And then ADRs of the Canadian-based Silex Systems, their co-owner of Global Laser Enrichment, which also was awarded money. That one was up almost 11% in today's session. And then for something a little different, I'm going to go to a biotech, Altimmune. That one jumping nearly 30% intraday at its high, finishing the day with a gain of just about 16%, 17%. The drug developer said its experimental therapy for a fatty liver disease, pemvidutide, received a breakthrough therapy designation from the FDA. I'm not quite sure if I said that right, but you know, sometimes when you don't, you just own it, go fast, and move on.
Yeah, it was an interesting selection there. You missed a few, though. QXO up 18% on the day.
I thought I had enough. Poor Finley.
Alcoa,
like she had a
Romaine, Happy New Year
to you, Tim. Senator. I missed you.
It's so good to have you back.
Let's get to some of the decliners on the day today. I do want to start with some of the energy stocks that did not actually finish higher on the day. Diamondback Energy, ticker FANG, down 3.5% on the day today. As I mentioned, we did see a rotation out of some energy stocks, especially U.S.-focused shale oil producers. If more oil companies come online, we could see greater supply and lower prices, which wouldn't be good for these domestic shale producers. Some of them are already slowing down growth due to concern for a global gut developing. Shout out to our energy team for helping me out with that analysis over at Bloomberg News. Diamondback Energy, Coterra Energy, Expand, APA Corp, and more. actually fell today. Once again, Diamondback Energy down 3.5%. And we also saw pharmaceuticals take a hit today, bucking the broader market's advance. The S&P 500 pharmaceutical index fell the most going back to September. Eli Lilly among the decliners, down 3.6%. Of the 7 stocks in there, 5 did fall today. And finally, Versant shares started trading today. This is the spin-off from Comcast of some of the cable networks, including CNBC and MS Now. Fell as much as 15.8% in the first day of trading. It ended up finishing the day down by 13%. The company has a market cap right now of about $5.8 billion. Fees from pay TV distributors and advertising were expected to have fallen. The company predicted earnings before interest, taxes, and depreciation and amortization would drop to $2.15 billion on sales of $6.62 billion for 2025.
All right, let's take a quick check on the yield space right now. A little bit less activity there compared to what we saw in equity markets, but we did see a drop across the curve today, about 2 basis points lower on the short end of the curve. Longer end of the curve, a little bit more dramatic with a drop of about 3 to 4 basis points there. Carol?
All right, so let's get to some stories on our radar. Hey, if you're thinking about maybe, sprucing up your home, you might want to maybe get a TV that actually looks like artwork. It seems to be the trend all of a sudden, and Amazon getting in on the game. It's called the Amazon Ember Art Line, Tim.
So if it looks familiar, it's because it kind of looks like Samsung's Frame TV, but it comes at like a fraction of the price. Remember years ago, CES was all about new TVs?
Yeah.
Like that's what it would be every year. Hasn't been like that in a long time, but this still TV is getting some love. This one comes with interchangeable bezels, 4K resolution, support for high dynamic range formats, 2,000 pieces of free art. But here's the thing.
Is it good art?
It's the Fire TV software interface, and the Fire TV mobile app will let users browse content and manage their watch lists. For TVs
so like
nowadays,
a regular television.
What's that?
Nothing, Tim. I'm just.
Well, I'm saying for TVs nowadays, it's all about the operating system,
Yeah.
You can put a Roku on anything essentially.
I have to tell you though,
I don't know if I want an Alexa-enabled TV.
Yeah, I was on vacation, and the house that we had rented.
You were gone?
They had one of these TVs. It wasn't Amazon.
It was a Samsung one.
But it was great. Honestly, we didn't realize it was a TV. It just looked like a piece of art on the wall, and then we kind of realized, oh, this is what we watch here. So I can see it. I like it.
I think what's interesting too is
I still have old,
Amazon,
small black and white TV.
Amazon copying other companies, right, with their products, and they've gotten really
quite
good
a bit cheaper.
I think the first time.
Yeah, we did miss you. By the way.
Yes.
Yes. There was more cliffhanger there.
I was going to go somewhere. But
you were ravishing.
By the way, Carol decided not to start the new year off like this.
We did miss you, so it's good to have the whole
team we missed
back.
you too. At least I did. I don't know about Katie.
I absolutely did. But I could watch them. You guys were on all last week, so you weren't far.
Just yeah, she said that you guys were on all last week.
She was the one watching us. She was the one watching us on vacation. So thanks for doing that.
I like to keep a TV on, support the cause.
All right. Anyway, Happy New Year, guys. It is good to be back with you. And that is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Katie and Romaine, of course, continuing there on the close on TV, and Tim and I continuing on Bloomberg Business Week Daily on radio. We'll see you again, same time, same place tomorrow.
Our coverage continues here on The Close. It's been a stunning 72 hours. The ouster of Nicolas Maduro and big concerns about that country's, Venezuela's, oil market. We're going to talk a little bit more about that, dive deeper into that on the heels of Maduro's first court appearance. Rebecca Babin over at CIBC. She joins us in just a second. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romaine Bostic. I guess a relatively good way to kick off the week and effectively kicking off the year, though we did have one trading session on last Friday in the new year. The S&P 500, though, didn't do much last week, but this week starting off on a big way, up about 0.6%. Most of the major indices today were higher by similar amounts, though we did see a stronger bid come into some of those cyclical names that helped to boost the Russell 2000 by about 1.6%. Outperformance once again, and that was your big leader on the day. But keep an eye on the commodity space, all of the ructions going on right now over in Venezuela, and more importantly, right here in New York with Maduro in town. You saw a big rally today in oil prices, up about 1% on the day. Gold also got a bid of about 2.6%. And then copper, not directly related to Venezuela, but that hit a record high as well. largely because of concerns about some new tariffs that could actually take effect over the next couple of weeks.
Absolutely, keeping a close eye on commodities. But let's talk about some of the biggest movers on the equity side. I want to start with Amazon, one of your biggest gainers from a points basis to the upside, rising about 2.9%. Apparently, Thursday Night Football had a great season. You can see that shares rising. Nvidia didn't do too much, but we're keeping an eye on this stock. We know that CES is kicking off. We're going to hear a lot from Jensen Huang in the coming days, so keep an eye on shares of Nvidia and Chevron. We've been talking about it all day. Of course, one of the biggest equity gainers, higher by about 5%, with a lot of questions about what the path forward in Venezuela looks like. And that is our top story this hour. Nicolas Maduro's capture reverberating around the world. The ousted Venezuela leader pleaded not guilty to U.S. charges. Meanwhile, Delcy Rodriguez taking over as acting president, securing unconditional support from Maduro's son. With live coverage from our reporters in the field, we'll bring you the latest from the courthouse, the White House, and from Latin America.
Well, let's start at the courthouse. Myles Miller is in lower Manhattan right now, where just a few hours ago, Nicolas Maduro walked in there, gave a plea, and then, of course, was helicoptered back to his detention facility in Brooklyn. A big question right now, Myles, as to what comes next.
Yeah, that's right. And, you know, the one thing that was really stark about that court hearing and reading the transcripts from our reporters in the court hearing is that it seems he hasn't grasped that he is on trial, will be going on trial here. He really believes that he should be treated differently because he is, or was, the president of a sovereign nation. Not so much when you're in a federal courtroom. Nicolas Maduro is back at Metropolitan Detention Center in Brooklyn tonight, as you said, pleading not guilty to those narco-terrorism charges. He's at MDC Brooklyn, which is one of the toughest federal jails in the country. Federal judges have called it dreadful, dangerous, barbaric, and high-risk detainees there are in specialized housing. 23 hours he will spend in his cell. There's rotten food. There have been thin mattresses there, filthy toilets. The lights are always on. No view from the outside. It is very different than what it was like in Caracas at the palatial mansion he was living in. 1 week ago, he was at his palace in Caracas greeting foreign leaders, including the foreign leaders from China who were there just on Friday. Now he's in that cell 23 hours a day. There are health concerns for him. His attorney, Barry Polk, told the court today that he has health and medical issues that must be addressed. He is, after all, 62 years old. And there have been questions about his health for over many years, including significant weight gain, concerns about diabetes and heart issues. His wife also has medical injury issues that were sustained during the arrest in Caracas. MDC has faced criticism over the years for health care, and when you're confined 23 hours a day with limited movement, those conditions can deteriorate. The judge set a calendar pre-trial motions in place today. His lawyers will challenge those charges, the evidence, and how he was captured. Discovery will be massive. That is an understatement. 25 years of alleged activity, wiretaps, witnesses, financial records, flight logs, thousands of pages. And so the court case will continue on March 17th. The next time we'll see him in that motorcade coming right back here to the courthouse. I'll send it back to you.
All right, Myles, really appreciate your on-the-ground reporting. That is Bloomberg's Myles Miller. Let's go to D.C. now, where Bloomberg's Tyler Kendall has the latest on President Trump and the White House. So you think about Delcy Rodriguez. She was inaugurated as acting president of Venezuela. She has said that she wants to work with Washington to make Venezuela great again, Tyler. But there's a lot of questions about what that relationship actually looks like here. Who is in control of this country?
Right, exactly, Katie. I think you put it perfectly, particularly since President Trump has asserted that the U.S. will run Venezuela, though U.S. officials have signaled that they believe that they can work with the newly sworn-in acting president, Delcy Rodriguez, who, as you mentioned, has sort of tempered her tone in the last 24 hours, saying that she will be, she wants to cooperate with this White House after we really saw her condemn the U.S. action and demanded Maduro be returned to Venezuela. A really important key part of this is how the White House has been framing what it wants its relationship with Venezuela to be moving forward. And there is such a heavy emphasis here on oil production and the U.S. taking this vested economic interest in Venezuela's future. In fact, President Trump himself has indicated that he doesn't want to talk about setting a potential election date in Venezuela until the country is on more solid economic footing. And it is reasons like that why our own analysts at Bloomberg Economics have indicated that there is now a downside risk here when it comes to potentially delaying the transition to democracy, because this White House hasn't really laid out exactly what those next steps are going to look like. But Katie and Romaine, a U.S. official, does confirm that there is this coalition that is engaging diplomatically with those remaining officials in Venezuela. So it's going to be something that we're watching really closely in the days ahead, as this White House says they're going to be watching the rhetoric and the messaging from Delcy Rodriguez. But also, we're going to get some headlines tonight because we know the U.S. Congress is about to be briefed by senior administration officials on how this entire mission unfolded.
The View from Washington, Tyler Kendall in our D.C. bureau. Now let's go down to Latin America. Crayton Harrison is our executive editor who leads our Latin American coverage. And a lot of questions right now, Crayton, about what exactly is going on the streets in Venezuela. We know that Delcy Rodriguez was sworn in, but there have been a lot of reports of various gangs and militias patrolling the streets, presumably to reinforce any loyalty that might still be left for Nicolas Maduro.
Right. Well, this is the Maduro regime sort of reasserting itself, right? And part of that is that swearing in with Delcy Rodriguez, who appeared after the new Congress was sworn in, the new National Assembly in Venezuela, and had this ceremony and had some remarks about how she wanted to restore peace and sort of, take care of the Venezuelan people and restore calm. But then out in the streets, you do see this. We've talked to a lot of witnesses in Caracas who have seen, some of the military intelligence patrols out. There are these sort of armed gangs called colectivos. They're sort of loosely affiliated with parts of the government that are out there as well. And, so there's sort of an air of repression out there. There's also a journalist organization that said that some reporters have been arrested. So these are classic tactics. This is the sort of thing that the Maduro regime has done over the years to make its presence felt and to remind everybody who's still the boss. And I think when you raise the question of who's in charge of Venezuela, and President Trump says that the U.S. is there on the ground, if you're living in Caracas or other parts of Venezuela, it's pretty clear to you who feels like they're in charge on the ground.
All right, Crayton, really appreciate the reporting. That is Bloomberg's Latin America executive editor, Crayton Harrison. Meanwhile, in the tech space, we are hearing from a very important person.
Yeah, we're going to get back to the story on Venezuela, but we should point out that Jensen Huang, the CEO and co-founder of Nvidia, now on stage out in Las Vegas at the CES show. We're going to actually dive into this a little bit later in the show, but we'll monitor and bring you any headlines as soon as we get them. We should point out B-Tech has special coverage of the CES event in Las Vegas, where a lot of these big tech companies unveil a lot of their big plans for the years going forward.
Yeah, a lot to look forward to there when it comes to the tech space, when it comes to Nvidia. But coming up, we're going to get back to those oil stocks, finishing the day higher following the capture of Venezuela's Nicolas Maduro. Up next, we'll take a closer look with Rebecca Babin, senior energy trader over at CIBC Private Wealth. This is The Close on Bloomberg. Well, Venezuela sits atop the world's largest oil reserves, but output during Maduro's 12-year term has left the country's crude infrastructure in pieces. Now that he's been ousted, attention now turns to lifting Venezuela's output back to its peak levels. Here to discuss is Rebecca Babin. She is senior energy trader over at CIBC Private Wealth. Rebecca, great to have you with us. And that's the question, right? Whether or not we're going to be able to see Venezuela return to those 1970s levels. And I love the title of your notes here. You write, vast abundance underground, constraints above ground. Talk to us about how you actually maybe start to get some of that oil flowing.
Yeah, so that's the key thing here is there's a ton of potential in Venezuela and everyone talks about it, but getting that potential into kind of real tangible crude flowing is a huge challenge. And we're going to talk about it in two tiers. We're going to talk about first restoring the infrastructure that's existing and in place. That is already worn down and needs a tremendous amount of kind of repair and restoration and the workers to kind of run that kind of project. If we can get there, we're looking at a $10 to $15 billion investment over 3 to 5 years, and maybe you get an additional 500,000 to 800,000 barrels of additional Venezuelan crude out of the ground. So you go from 1 million barrels a day of production, which is where Venezuela production was at before sanctions were put in place, to maybe something like 1.5 million barrels over a 12 to 18 month period with a $10 to $15 billion investment. Now, if we want to go back to something like 3 million barrels a day of production, like we saw in Venezuela in the late 90s, you are talking about new infrastructure and a huge, huge increase in CapEx to get there, hundreds of billions of dollars. I'm seeing estimates of about $100 to $120 billion of investment, and we're talking about a 5 to 10 year time horizon, and even some people think that's aggressive.
Yeah.
So that. Oh, sorry, go ahead.
I'm curious though, Rebecca, but on that point, do you think that U.S. oil, or not just U.S., but really any major global oil company wants to take on this project? I understand the potential returns if this is successful, but given the cost, given the fact that we really have no idea what this government is going to look like anytime soon, who do you think is actually going to be willing to actually step up?
That's a great question. You would need ironclad contracts that supersede the Trump administration and have some kind of contingency plans for the event that a different government in Venezuela is in place that rejects these contracts. So you would look at companies that are really confident in the fact that they can get these contracts in place and enforced. That group of companies is obviously small. I mean, we've seen companies like Chevron and ConocoPhillips involved in Venezuela. They've stayed there, at least Chevron has, to a certain extent and kind of muddled through these events. So you look at players who have been involved in Venezuela, still have assets there, maybe have some debts that are still owed to them from previous investments in Venezuela, as the companies that would be most likely to look at doing these types of projects. However, as I think many people have said, and I will reiterate, there are going to need to be some significant guarantees, and that's not a sure thing. I don't think many companies are chomping at the bit for this type of risk when you could put that dollar in the ground, maybe in Argentina, and get a different type of return, maybe not as juicy, but on a lower risk profile.
And Rebecca, we have less than a minute left with you, but obviously we've seen the likes of Chevron and a lot of these oil majors rally, but it hasn't been necessarily a blanket rally when it comes to energy equities. You think about some of the Canadian oil sands companies falling today. If we do unlock Venezuela's output levels here, I mean, this would be bad news for maybe some of those Canadian companies.
That's true, and that's a great point. Canadian oil competes directly with Venezuelan oil. They're both heavy crudes. Canada sells most of its heavy crude into the United States. They are most likely going to be impacted in the event that we see an increase in Venezuela supply, which is why that group was heavy. I think it might be premature, though, to say how much crude actually ends up coming from Venezuela in the short term.
All right, Rebecca, I have to leave it there. Always so smart. Rebecca Babin, senior energy trader at CIBC Private Wealth. When we come back, we continue our coverage with Maduro's ouster sending shockwaves globally and raising a lot of questions, not so much about what happens in Venezuela, but what about the rest of the world? Ryan Berg is the head of the Future of Venezuela initiative at the Center for Strategic and International Studies. He joins us in just a second here on The Close on Bloomberg.
Welcome back to The Close. We do have some news coming out of CES, where Nvidia CEO Jensen Huang is speaking now, delivering that keynote. And he actually just announces, Nvidia announces that they are unveiling this Alpha Mayo model for thinking vehicles. TechCrunch basically describes it as an open AI model that will allow autonomous vehicles to think like a human, Romaine. So let's listen in.
And help you read it. And so our PDF retrievers, our PDF parsers are world class. Our speech recognition models, absolutely world class. Our retrieval models, basically search, semantic search, AI search, the database engine of the modern AI era, world class. So we're on top of leaderboards constantly. This is an area we're very proud of. And all of that is in service of your ability to build AI agents. This is really a groundbreaking area of development. You know, at first when ChatGPT came out, people said, you know, gosh, it produced really interesting results, but it hallucinated greatly. And the reason why it hallucinated, of course, it could memorize everything in the past, but it can't memorize everything in the future, in the current. And so it needs to be grounded in research. It has to do fundamental research before it answers a question. The ability to reason about, do I have to do research? Do I have to use tools? How do I break up a problem into steps? Each one of these steps, something that the AI model knows how to do, and together it is able to compose it into a sequence of steps to perform something it's never done before, never been trained to do. This is the wonderful capability of reasoning. We can encounter a circumstance we've never seen before and break it down into circumstances and knowledge or rules that we know how to do because we've experienced it in the past. And so the ability for AI models now to be able to reason, incredibly powerful. The reasoning capability of agents opened the doors to all of these different applications. We no longer have to train an AI model to know everything on day one, just as we don't have to know everything on day one, that we should be able to, in every circumstance, reason about how to solve that problem. Large language models has now made this fundamental leap. The ability to use reinforcement learning and chain of thought, and, search and planning and all these different techniques in reinforcement learning has made it possible for us to have this basic capability, and is also now completely open sourced. But the thing that's really terrific is another breakthrough that happened. And the first time I saw it was with Ervin's Perplexity, the search company, the AI search company, really innovative company. And the first time I realized they were using multiple models at the same time, I thought it was completely genius. Of course we would do that. Of course an AI would also call upon all of the world's great AIs to solve the problem it wants to solve at any part of the reasoning chain. And this is the reason why AIs are really multimodal, meaning they understand speech and images and text and videos and 3D graphics and proteins. It's multimodal. It's also multi-model, meaning that it should be able to use any model that best fits the task. It is multi-cloud by definition, therefore, because these AI models are sitting in all these different places, and it also is hybrid cloud. Because if you're an enterprise company or you built a robot or whatever that device is, sometimes it's at the edge, sometimes a radio cell tower, maybe sometimes it's in an enterprise, or maybe it's a place where a hospital where you need to have the data in real time right next to you. Whatever those applications are, we know now this is what an AI application looks like in the future. Or another way to think about that, because future applications are built on AIs, this is the basic framework of future applications. This basic framework, this basic structure of agentic AIs that could do the things that I'm talking about, that is multi-model, has now turbocharged AI startups of all kinds. And now you can also, because of all of the open models and all the tools that we've provided you, you could also customize your AIs to teach your AI skills that nobody else is teaching. Nobody else is causing their AI to become intelligent or smart in that way. You could do it for yourself. And that's the work that we do with Nemotron, Nemo, and all of the things that we do with open models is intended to do. You put a smart router in front of it, and that router is essentially a manager that decides which one of the tasks, based on the intention of the prompts that you give it.
Jensen Huang, the CEO of Nvidia, on stage at the CES show out in Las Vegas. We're going to continue to monitor this, but the main thing here is the rollout of a new product here that he says will help facilitate progress towards fully autonomous driving. Mandeep Singh joins us right now. He is Bloomberg Intelligence's global head of technology research. And Mandeep, I have to be honest with you, I didn't understand a lot of what he was just saying there on stage. So kind of give me the sort of a layman's version of what exactly he's pitching here.
Well, one, he talked about how much progress we have made, over the course of the last year, and it was a recap of how far these models have come in terms of intelligence. And what Nvidia is doing is not only providing the chips, but they are also open sourcing a lot of the models, for development. And, that contrasts with what OpenAI and Anthropic are doing, which are closed source models. But what Nvidia is saying is, by open sourcing, they want to expand beyond the large language models, which are good at text, into physical AI. And that's been the focus, I think, so far of his keynote, is really that physical AI aspect where humanoid and robotics would benefit from all the advancements that we have seen with AI over the last 2-3 years.
All right, Mandeep, we'll let you listen back in there. That is Mandeep Singh. He is Bloomberg Intelligence Global Head of Technology Research. Of course, wrapping up what we've heard from Jensen Huang so far at CES, Nvidia unveiling that Alpha Mayo model. Meanwhile, let's take a quick look at how markets closed on the day. We start with what we saw with the S&P 500 rallying by 0.6%. Then you take a look at the small caps. What a day for the little guys. The Russell 2000 higher by about 1.6%. And Romain, you highlighted this earlier. The big rally that we saw in copper, finishing the day about 4% higher.
Yeah, and we haven't had time to talk about it, but this is going to be a big story over the next few days. Remember, we're expecting a Supreme Court ruling on those tariffs, maybe as soon as this week.
You heard it here first. Gold also rallying on the day. This is the close on Bloomberg.
Venezuela's Nicolas Maduro in a U.S. courtroom, a federal courtroom, pleading not guilty to narco-terrorism charges after his stunning ouster as president of that country by the U.S. military just about 72 hours ago. There are a lot of concerns here about the potential ramifications for the leaders of neighboring countries, whether it be Colombia or Ecuador. Joining us right now to discuss is Berg. He's the director of the Americas Program and head of the Future of Venezuela Initiative at the Center for Strategic and International Studies. And Ryan, narco-terrorism, of course, is not unique in Latin America, but our approach, the U.S. approach to it, has varied over the years. When you look at what happened on Saturday night, early Saturday morning, I should say, and you look at where this could potentially lead, do you see or do you anticipate that we could see other types of seizures or military action in other countries for similar reasons?
Good afternoon. Thanks for having me on. Certainly that's President Trump's warning to other countries, but I think he's using the credibility of the success of the operation and this operation that was really presaged for a long time. It was an operation foretold. The president talked about land strikes and a potential operation against Maduro for many months, to the point where the regime actually started to believe it was a bluff. It wasn't a bluff in the end, and the operation turned out to be incredibly successful. What I think he's doing is using that as a credible way of saying we expect both allies and adversaries alike to start implementing policies that look more pro-U.S. and cooperative, especially on key issues like migration and drug control and counter-narcotics, or else these are the kinds of consequences that can befall individuals like Nicolas Maduro.
I mean, no one doubts the U.S.'s military might to go in and do these things. No one. What they do doubt is whether they have the temerity, the patience, the skill, and quite frankly, the will to actually manage this process over the next few months or maybe even potentially years. Of course, we all sort of looked at what happened over the weekend, and I think a lot of us immediately thought about Afghanistan and Iraq and the idea of whether we're, or even Vietnam, and whether we're getting ourselves into some sort of long-term quagmire. Do you see that risk?
Indeed. I mean, my first question was, what does it actually mean to run Venezuela? My first thought was something like the provisional government that was set up in the wake of invasions in the Middle East. And those obviously didn't go so well, and they played such an important role in President Trump's rise. So we got further clarification. I wouldn't say total clarification, but further clarification in subsequent days, what exactly it means to run Venezuela. And the Secretary of State, Marco Rubio, said, look, we're going to use the incredible amount of pressure and leverage that we have to be able to put pressure on the remnants of the Maduro regime that have been left in power in Venezuela to pursue pro-U.S. policies. And he outlined a couple areas where those metrics will be incredibly important. These shouldn't be any surprises to those who've been paying attention to Venezuela. They're drugs, migration, oil and energy issues. as well as some of those key alliances that Venezuela maintains, like sundering its relationship with China, cutting off Russia, cutting that connection to Cuba, Iran, Hezbollah, and other actors that the Trump administration feels present a clear and present national security threat in the Western Hemisphere. What remains to be seen is just how much this kind of rump Maduro regime that's been left in Venezuela is willing to play ball with the United States when it has such a long history of anti-Americanism.
Right, Ryan, that's what I'm wondering. Basically, where does this leave the Venezuela government, which today inaugurated Delcy Rodriguez as the acting president? Now, she has indicated that she would like to work with the Trump administration. But moving forward, I'll ask you the question that I asked our D.C. reporter, and that is, who is actually in charge of this country right now? Is it the acting president or is it the U.S. at this point?
Well, I think the decisions are being made by the acting president, Delcy Rodriguez, but the decisions are being heavily influenced by the way that the United States is seeking to exercise leverage through that sanctions architecture, the large military deployment still operating in the Southern Caribbean, and the naval quarantine against ghost fleet ships that are moving a lot of Venezuelan oil. That's a lot of pressure that the U.S. can bring to bear on policy. But again, what remains to be seen is how much of the policy levers can actually be moved with that immense amount of pressure versus how much this regime will continue to try to resist U.S. influence.
And I'll follow up on a question that, Romaine asked you at the beginning, and that is, what does this mean for the world order as it stands right now? Whether or not you think about the U.S.'s actions in Venezuela, whether this could embolden China, for example, to more aggressively move into Taiwan, or you think about, Russia and the situation with Ukraine, whether or not seeing the U.S. successfully pull off a maneuver like this without consulting seemingly any of its allies, what that means for some of the other antagonists on the world stage.
Well, as Romaine said, the operation was tactically brilliant. Another one similar to Midnight Hammer, and Dan Kane and the Joint Chiefs and all the planners and planning that went into this should be commended. So that in itself is a message to our adversaries. Keep in mind that the Venezuelans were counting on Russian and Chinese equipment, especially air defenses, to protect them. There are major questions a few days after this operation was pulled off so successfully, whether those things are actually worth the money that many countries around the world have paid for them. But I think the broader point here to make is that this says a lot about where the U.S. feels it is in broader issues of great power competition with China. We're in a phase right now where we've declared a competition. We've declared that this competition will last decades. We're in the phase now where we're looking to consolidate our position in our immediate neighborhood. I think it's safe to say China is doing the same thing. They've become incredibly aggressive in the South China Sea. Both sides looking to make sure that their immediate abroad is more in favor of their policies and get ready for a long-term struggle that will be systemic in nature and probably lasting decades.
All right, Ryan, got to leave it there. Really appreciate the time. That is Ryan Berg. He is director of the Americas program at the Center for Strategic and International Studies. Now coming up, Bitcoin hitting a 3-week high. David Portilla, he is partner at Davis Polk and Wardwell, shares his outlook on what's next for crypto in the year ahead. This is The Close on Bloomberg. Well, Bitcoin hit a 3-week high today, brushing off geopolitical concerns and setting a positive tone for 2026 after a year of underperformance. Now, our next guest says that the next leg for crypto hinges on market structure legislation, and the onus is on Congress to seize the moment. Joining us now, I'm pleased to say, is David Portilla. He is partner at Davis Polk and Wardwell. Great to see you in person.
Thanks for having me.
So you think about 2025, I mean, that was a big year. You saw the president sign the Genius Act into law. The House passed the Clarity Act. When you think about 2026, what piece of legislation specifically are you focused on?
Yeah, as you said in the intro, it's really what people are calling the market structure legislation, which in the House, which they passed in July 2025, was called the Clarity Act. Once the House passed it, the Senate started its own work in earnest, and the Senate is working on what they call the Responsible Financial Innovation Act, or RFIA, and that work's being done by two committees in the Senate Banking Committee and the Senate Agriculture Committee. Mm-hmm. And so the real question is, can those committees do that work, put it together, and then reconcile with the House what the House did with the Clarity Act.
Well, you were also making the good point in the commercial break that you think about, some of the acts that we saw in 2025. They had the added bonus of a push by the administration to help get it over the line. And you think about what's going on in the world today, all of the geopolitical concerns. Do you think that the administration has the bandwidth to really give the attention to crypto market structure right now?
Yeah, it's a great question. Look, these pieces of legislation are complicated, and at the end, at the finish line, there's always a few issues that are tough to resolve, and the way to get them through is really a big political push. We saw that with the Genius Act, the stablecoin legislation, and I think we have the same issue here. And look, I think that this administration supports crypto. He's the crypto president, and so I think they have the policy desire to see it done, and the real question is just, do they have the bandwidth based on everything that's going on geopolitically? But I think they want to get it done.
They want to get it done. I guess the question is, do the big financial institutions, traditional financial institutions, I should say, they're advocating for this specifically?
Look, I think everyone has an interest in market structure legislation, the digital natives and the traditional financial institutions. From the perspective of the traditional financial institutions, they want clarity, that they can engage in these activities, that they're permitted to. And what they really want to avoid is the pendulum swing that you saw from administration to administration. So during the Biden administration, the banking agencies, for example, and the SEC were very negative on crypto. And then the pendulum swings back. And I think the traditional financial institutions just want certainty so that they can invest in the product, invest in the asset class, and offer it to their customers.
Based on what we know about this legislation, how well will it address the issues, the potential issues with regards to fraud and other criminal activity? There was some great research by TRM Labs talking about the big increase that we've seen in fraud, in hacks, and other thefts. And they seem to attribute it, they did, not us, to this idea that you have an administration that basically was looking the other way, that they were certainly advocates for crypto, but not necessarily willing to sort of do the work with regards to oversight.
Look, from my perspective, when you bring things into a regulated environment, that's all for the good. So when you have traditional financial institutions, the digital natives, all operating under a federal regulatory framework overseen by the banking agencies, the SEC, the CFTC, with clear authority, that should make it safer for consumers, safer for institutions, institutional investors, and reduce fraud, because you now have a federally regulated environment.
Well, you bring up an interesting point, and one that has been a topic of debate over the past several years is, who has ultimate authority over crypto? You think about, the alphabet soup of regulation, the SEC, the CFTC. In the ideal world, how would those responsibilities be split?
That's one of the big issues. During the prior administration, the SEC took a very expansive view of its jurisdiction. But at the same time, it didn't adopt any rules for digital assets, for crypto assets. And that really stifled markets. They brought a lot of enforcement actions that had a stifling effect. What's the general principle? The SEC is the regulator of securities. A security is a equity security or a bond issued by a business enterprise, and the SEC regulates those disclosure around the securities and capital raising transactions. So something like that should be with the SEC. Something that's more like a commodity, like Bitcoin, that naturally goes with the CFTC.
Yeah. Well, I am curious, though, about the global nature of this. We're talking about a global asset class, so in a way that's very unique. It's a little bit unlike stocks that trade on a very specific exchange, and you need access to that. Crypto obviously doesn't have those borders. So how does U.S. legislation, market structure legislation, how does that dovetail with whatever's going on in other major countries?
Well, the real benefit of having federal legislation in that sense is that Congress can say, this is how we want the agencies to regulate cross-border transactions, cross-border activity, and give them that authority. And it makes it clear so that everyone knows what the rules of the road are. If you're a non-U.S. institution selling into the U.S., you're either subject to the U.S. rules or you're not, and vice versa for U.S. firms going abroad.
All right, David, always great to talk to you, and really great insights. And one of the big things investors will have their eyes on as we move deeper into 2026. David Portilla is partner over at Davis, Polk, and Wardwell. All right, as we wrap up our coverage here on this Monday afternoon, Katie Greifeld, let's push ahead to what the markets will have their eyes on over the next 24 hours, and we start overseas.
We certainly do. In France, in Germany, we get CPI figures out of both of those countries. I think you can wake up early and catch some of that.
Yeah, I will. Or if you don't want to wake up early, 9:45, right here in the United States, we're going to get a read here on the services sector. S&P Global Services PMI is scheduled to be released.
Yeah, much more pedestrian time there. Also, we do have some Fed speak to look forward to as well. We're going to hear from Richmond Fed President Tom Barkin. Of course, the direction of travel for interest rates, very hotly contested right now.
We haven't even talked about that all day. It's so many things coming into 2026. The markets are really going to have to keep an eye on beyond, of course, what's going on with geopolitics. I always forget about rates. And then, of course, there's the tech trade. And as we speak right now, Jensen Huang is on stage out at the CES conference, a big consumer technology conference. We should point out, he's actually going to be here on Bloomberg tomorrow.
Yeah, absolutely. You don't want to miss Nvidia CEO Jensen Huang, as well as the Siemens CEO, speaking tomorrow on BTV at 1 p.m. Eastern. Certainly looking forward to those conversations.
All right, Katie and I will be back tomorrow at 3 p.m. Wall Street time. In the meantime, stick around. A lot going on in the world of geopolitics. Joe Matthew and the team of Balance and Power, they're getting everything together for you for the start of the hour right here on Bloomberg.